Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. Well, hello everybody. Welcome back to another live stream. Happy Tuesday. Hope you're doing well and hope you're trading safe. Good number of people hanging out in the chat this morning. We got 211 people. Give people just a few minutes to kind of tune in. Usually the stream between all the different platforms, we get up to 500, sometimes even more people viewing. So wherever you are in the world, take a second. If you haven't already, let us know where you're tuning in from. I had some people saying it's evening time where they are. Of course, it's morning time where I am, but I know people all over the world watch these streams and trade together with us here. So it's good to have everyone here. And thank you for tuning in right on time, as Elifie says in the chat. Good morning to everybody. Or good evening or good afternoon, wherever you are in the world. Hope you're settling in and we can take a look at some charts together and see what we can find. Also, I had some messages. There were some people commenting earlier that they had sent a message in regards to getting access to the EdgeFinder or getting a membership with us. If you sent in a message, please be patient. Of course, we just got to the office, so our support team will be reaching out to you shortly. Also, if there's something really pressing, if you just need to speak to a member of our support team, here's where you can do so. They are in office and available to answer any questions you might have if you need some help. Link is in the chat right there. If you need to speak with someone, if you are waiting on getting EdgeFinder access, or if you are requesting information about the discount and you don't want to miss it, it is ending soon. So don't miss your chance to pick up that 45% off discount on the EdgeFinder, which is ending this week. All right. Let's jump in. So S&P 500 is flat this morning. NASDAQ is also back to those highs, but also a little flat this morning. There were some data points this morning. Did anybody keep an eye on the BLS jobs data adjustments that were supposed to come out this morning? I believe it was 8:30. I think it was 30 minutes ago. Did yields make a move? That's where I'm going to look first. Not really. Nothing too sudden. Gold and silver. Silver's down a little bit here this morning. Gold is also flat this morning. Well, I should say it's up this morning. It feels like if it's only up by 0.4%, that's a slow day for gold these days, because gold has just been going rocket ship to the upside. So yeah. And like I said, if you are somebody, I saw a couple people who had that question about speaking with someone from our team. I know the chat is moving right now. That link is in there. If you need to speak to someone, just click that link. You'll be connected to a real person from my staff. Okay, so what's moving here? So S&P flat, NAS flat, Dow Jones flat, Russell is flat. All the stock indices are not really moving. Dollar index did break through those lows that we talked about yesterday. Take a look at where we left off. We were able to close with some pretty decisive price action beneath the prior lows here. Support did not seem to hold very well, although we did quickly come down to our next area of support right around here at 97.25. I'm sorry, 97.25 on the dollar index. We'll see if we catch a little bit of a bounce here. On this week, you have really the big data points coming out Wednesday and Thursday. That is going to be your inflation statistics. You had the producer price index number and you have the consumer price index number coming out Wednesday and Thursday, respectively. That has the potential to move the dollar, right? Because if you get inflation data that is higher than expected, I think that could spook the market. And if you get something that is lower than expected, the market will cheer. I'm specifically talking about the stock indices when I say quote unquote the market. Gold is interesting because I made a point in our Discord group, which I think is worth mentioning. Where's my Discord group? Okay, so I made this comment in our Discord channel that I thought was worth discussing here on stream. So in regards to inflation data, which is definitely the mover of this week, I said inflation is on deck this week. We have producer price index and consumer price index Wednesday and Thursday respectively. And I basically made this note. Higher inflation than expected would mean stagflation worries, right? If inflation is spiking higher, while we also have, as we've been discussing, slower jobs data, you have that combination that is a bit of stagflation concerns. At the same time, what about if you get lower than expected inflation? Gold could then rally on rate cuts. What you might pick up on is that gold could rise in either circumstance. Stagflation worries or more rate cuts. Both are positive for gold. Now, that does not in any means guarantee that gold is going to go higher for just the rest of this week, no problem. But I think that's why you have, smart traders, they already knew this, right? They already are like, yep, we've got inflation stickiness, or better than expected inflation. Both scenarios favor gold. So gold traders, smart gold traders have already been buying gold, right? They've already been long the metal because they looked ahead, right? This is what the market does. Smart investors at the top of their game are looking ahead. They're saying inflation data, if it's hot, it's good for gold. If it's cold, it's good for gold. See what I'm saying? Do you see that's what I'm trying to point out, is that both scenarios are good for gold. Now, again, by the time that data comes out, things could change. But that is why I think gold is just straight shot to the upside. Is we know we're going to get rate cuts. We know the economy is seeing jobs data decline. Inflation, whether it goes up or down, both scenarios are okay for gold. This is why the EdgeFinder has figured out, look, jobs data is poor, inflation data is sticky. Gold is getting a bullish reading. It's like a rumor detecting software. The rumor is, hey, we got cool jobs data and we got sticky inflation. Stagflation is what? It's bullish for gold, right? Again, I'm not coming up with this and then, punching in the numbers on the EdgeFinder. The EdgeFinder is coming up for me, right? That's the cool thing of having software that tracks the macro for you. And again, most traders do not have any sort of thing that does this for them, and having it is a game changer. Somebody in the beginning of the stream today said, guys, is the EdgeFinder worth purchasing? And I've got two ways that I can answer it. First of all, the question to you is, do you see the value in spotting the macro directional bias that the market is giving you? Because if so, you caught things like gold and silver. If you ignored the macro, then you were like bearish on gold and silver, right? But the macro has been screaming jobs data is cooling off at the same time that inflation is sticky. That is 101, economics 101, slowing jobs, spiking inflation, gold looks attractive, right? So having a software that detects that for you can help you to better spot the directional bias. Okay, so that is what the EdgeFinder does. The second thing I'll show you is that over the last multiple years, I've shared publicly broker logins to show you that what I do and what I have done works. I've outperformed the S&P 500 in the last 6 years. I've logged into my brokerage. I'll do it right now because, again, I believe that transparency is important. So this is my personal account. This account started with $50,000 in 2020. I have shared every couple months a login and a breakdown of the performance of this account. This account has primarily been traded with the help of the EdgeFinder. Now, the EdgeFinder is not a holy grail where you just do exactly what it says and you're going to make money every single time. If you're looking for that, then you're in the wrong space. Trading is not that certain. I've had drawdowns, painful drawdowns within this period of time, but the account has been able to do really well over this stretch simply by paying attention to the macros, right? Or the macro, the economy, the force of the market, the true reasonings for why markets are moving, adhering to them and looking for good risk reward setups on the technical basis. That is it. That is what I do day in, day out. Every day you tune into the stream, we're talking about the same thing because it works. Again, nothing is certain, nothing is guaranteed. I can't tell you exactly what gold is going to do today or tomorrow, but I don't need to. I just need to make educated guesses and manage risk accordingly. Nick, do you day trade or are you swing trading now? I have only swing traded for the last 6 years. I don't day trade. So yeah. Nick, should I buy the EdgeFinder or the Signal service? You should buy whichever one is more tailored to you. If you're somebody who wants to learn more of the thinking behind why I place the trades that I place, the VIP group might be better for you. Like if you want to read along with my notes, if you want to see the trades I'm taking, every trade that I take on that account that I just showed you, everything that I take, I share it in our VIP room. So if you'd like to see that and learn from why I'm taking the trades that I'm taking, that might be the better service for you. If you're like, I have a decent strategy, but I lack the macro, get the EdgeFinder. Again, the thing is, people sometimes are like, Nick, you're selling something. And I'm like, yes, I am, because it works. Get tools that are proven by verified results. That's it. So there you go. S&P 500 back to the highs. We are flat on the day. The question is, what takes you to new highs, right? What gets the S&P 500 to break out here? And my concern is that you're sitting at consolidation. You have a macro outlook that does not look super attractive for stocks. We've talked about this numerous times on the show, and I'm still in this camp of thinking, okay, US stocks, not particularly attractive because you have jobs data. This bottom half, these are your jobs data points, including unemployment rate. Your jobs data has been significantly lackluster. And the thing that I'm really concerned about with the macro is for the last few years, we've had just pretty strong jobs data. In fact, many times Powell has mentioned that he was pretty surprised by the state of the labor market holding up pretty well. And it has held up really well, given everything we've thrown at it, including inflation spikes, COVID pandemic, an invasion of Ukraine by Russia, all these forces that have been thrown at the U.S. economy. The U.S. economy has been very, very resilient. But the thing is, during that time, what we never really saw crack, you had a lot of people who were like, oh, the U.S. economy is falling apart. What never cracked was the labor data. My concern is that you actually now see it starting to crack. And again, I'm not a doomsdayer person on social media, but I'm looking at the data and I'm saying, this is concerning to me, where I have to say I can't justify buying stocks at their all-time highs on what I think could actually be a sustained labor market downturn, which is the sort of recipe for a possible, not a certain, but a possible recessionary period, right? So if I'm looking at the stock market sitting at all-time highs, what's my risk here to buying heavily into stocks and risk assets? Well, my risk is big because especially unless I'm, with a real tight stop, but I don't really know where you put a tight stop on this trade other than below, and I just don't love the probabilities for a huge move higher. Could it happen? Sure. I'm not going to short this market either because the technicals are still in an uptrend, right? So when we look at the indices, there's nothing for me to do here. I'm neither bullish nor convicted enough to actually place short positions or bearish bets, right? That's my synopsis on the macro. Is you have jobs data materially weakening. That concerns me. Where that actually gets me interested is metals, which is why we've been, so adamant on this channel about gold and silver. To me, look like they're going to keep moving higher. They've been moving higher for 3 weeks straight now. I'm personally long silver, which is going pretty well. If we can actually see, we may be forming a potential higher low here. If we can get a break through those highs, then I'm going to look to trail stops again on this trade and just keep going with it because I don't know where silver and gold are going to go. People have just been commenting on my videos like this is ridiculous. It has to come down. I've messed up. I'm very short on gold. And look, I am by no means perfect. I've made many mistakes in the markets, and I've made substantial progress, but it came at the cost of like learning a lot of things and really getting humbled by the market many times. Part of the thing that you learn is that when you have a chart that looks like this, gold, let me ask you to think about something with me. If you're short gold, what are you actually shorting? You are shorting inflation. Okay? When you short gold, you're betting on the value of the dollar, right? That just by itself sounds like a bad trade. The dollar has lost nearly 100% of its value over the last 50 years or whatever, 100 years, whatever it is. And so my point is, long gold is sort of the archaic protection of wealth trade, the inflation hedge over long periods of time. Shorting gold is a losing bet for the last 5,000 years. That doesn't mean that gold can't have a down move, or that, there are times potentially to short gold, but it's a really tricky trade. The path of least resistance for gold is always up. Doesn't mean, like I said, that it has to go up every day. There are times where you get sharp drops in the price of gold. You can have these down moves, but understand that when you take a short position on gold, you are fighting the natural way of things. They print currency every single day. They can't print gold. You see what I'm saying? Is it a little stretch to the upside? Absolutely it is. Is gold overbought? Yes. Does that mean short? No. This is really counterintuitive, but look at this. We've talked about this chart a lot on my videos recently. Pull up a weekly chart. We are in an overbought status. Guess what overbought has meant in the last like 20 RSI overbought readings here? You buy this, you made money. Okay, so every time it prints overbought, watch what happens. If you bought this overbought reading, you made money. If you bought this overbought reading, you made money. Bought, you made money. Bought, you made money. Bought, you may have gotten flat, but if you held it, you made money. Bought, you made money. Bought, you made money. Bought, you made money. You see what I'm saying? Overbought isn't a thing in gold when it's in an uptrend. When gold is really moving, every single one of these, you made money. Do you see what I'm saying? If you think you're so able to call the top on gold, again, do so at your own risk. It's like swimming with no lifeguard with an anchor attached to your ankle. That's what shorting gold is like. You got to be real strong to not drown. And again, it doesn't mean that you should go out and chase these highs, but I'm saying that shorting them has been a really awful trade the last few years. And so if you're a steward of history, right, if you're studying historical price action in charts, you got to be careful. And I know this is sort of a painful subject for people. I've been ranting about it a lot. I know it's painful because I know I have been there. I'm speaking from experience, ladies and gentlemen. I've shorted rallies thinking I was so smart, only to be caught in a horrible, thinking, sell when everybody is greedy, right? That can be some famous last words, especially if you are using leverage or margin, or, you're buying puts or something like that. It can be really painful. So I'm not teasing anybody or trying to make you feel bad if you made this mistake. I'm telling you, you're not alone. And human psychology is really dangerous in markets. We look at this and we say, this thing's gone too far. It's got to pull back now, right? And that is such a dangerous mistake. So if you're in gold, I talked about this at length yesterday. If you're in gold or you're in silver, the path of least resistance to me is to continue to see it move up. I don't think the risk reward to buying it here is good. So I can't buy, can't sell. If you're in it, my opinion, how I'm managing it, right? I am in it. I'm in silver, not gold. I'm just trailing stops. I don't know where this thing wants to go. It could sharply correct at any moment. I'm going to take profits if that happens with a trailing stop. If this thing rips to new highs, which I think is very possible, otherwise I would have taken profits. I think it's possible that it keeps going. Then I'll trail stops again. You see what I'm saying? It is a perspective of reactive to what the market's doing, not trying to predict every little thing. Okay? So again, this jobs data weakness, this inflation stickiness, we'll see more about that this week, but that combination just to me signals that I'm staying away from stocks. I'm staying interested in metals. That's it. What made it worse after I got in, I saw this channel's very bullish assessment and was like, oh crap. Yeah. Look, you have to understand, I am not always right either. Like sometimes you're going to get onto the streams and you hear like, oh, Nick said he's really, bearish on the dollar, and then the dollar rips, right? Like I'm not always right. Trust me. Just stick around. You'll see I'm wrong often. But you don't have to be right all the time. You just need to make it count when you are right and manage it when you're wrong. That's it. Your correct rate really doesn't matter that much in trading. It matters what you do when you're wrong and what you do when you're right. A lot of people, when they first get into trading and markets, they look to people that have social media presence in the eyes of like, hey, these guys know, like if I watch them, they're going to tell me where the market's going to go. What I'm telling you is that I don't know where the market's going to go perfectly. I have an educated guess. And if I'm right, I'm going to manage it and hopefully make the maximum that I can out of it. And if I'm wrong, I'm just going to cut it quick. Like for example, Bitcoin, I think I might be wrong on this one. We're very close to getting stopped out on this trade. I went short. It didn't work out. All right. So this is a trade that I thought had potential to roll over and keep going down. And if it breaks through these highs, I'm taking a loss. Yields are up a little bit here this morning. International yields up a little bit. Japanese yen strong this morning. Interesting stuff there. Let's just take a look at majors. Let's look at everything except for minor currency pairs really quick. So here's what we're working with in terms of this week's setups. Interestingly, we got dollar CAD getting a bullish reading because CAD data I think has been really rough. Gold, silver still on top in terms of bullish setups. Aussie dollar, let's take a look at that because I talked about that yesterday. DAX is getting a bearish reading, which I find really interesting. So let's look at, where do we want to start? Let's start with Aussie dollar really quick. So the Australian dollar back to those highs. Looks like it wants to break out here. We're sitting back at those previous highs here around 6,600. I'd look for something like this, a solid break of this area. Looking for continuation there on the Australian dollar. The DAX, let's look at the DAX really quick. German DAX. I think the only way I would get a bearish bias going on the German DAX would be if you actually broke support here. Otherwise, probably no interest in this because this is still, I would argue, a pretty strong uptrend this year. So DAX would be interesting. A short possible setup below 23,300. I'd wait for momentum on the short side. VIX is up a little bit this morning. I would love to see some more VIX interest, to be honest. Nick, will you ever integrate every trader positioning from every CEX to EdgeFinder CoinGlass platform? I'll look into it. We're always kind of looking to improve speed in terms of data. Although the EdgeFinder is not necessarily built for speed, it's not really like a scalper's tool per se. Now, scalpers use this because they get a directional bias that's bigger picture. But like really the EdgeFinder's power is looking at a wide set of data and just generating an overall general consensus, right? So like if I'm looking at, economic data and I want to essentially ask EdgeFinder like, hey, EdgeFinder, what do you think about, let's say, metals, right? If I go show me metals really quick, what do you think about them? This is what the EdgeFinder's strength is. EdgeFinder, the way to read this would be to say, EdgeFinder says COT data, retail positioning, seasonality, and trend all look really favorable to gold. And of course, you could go inspect these things further really easily. COT data is getting a +2 score. Why is that? Well, when you start to understand, okay, gold is the most bought on a proportional basis asset that we have in the EdgeFinder on an institutional level. Institutions are straight up bullish and long gold and silver. So when you take that into account, you go back again, every single line of this, every column of this is doing a research, like studying the data for you and helping to get an idea. So COT data is bullish, retail positioning looks bullish, seasonality. So, checking month to month data, trend data, it's looking at all these different economic metrics, inflation statistics, PMI statistics, et cetera, and helping to generate the bias that you get here on the far left. Having that in your back pocket as a trader to me is a superpower, because then I can say, okay, thanks EdgeFinder, and I'm going to go look at those charts and see if I can find a trade. And I like to use the directional bias that it has to help me find a trade predominantly in that direction. So I agree with the silver and gold setups. So I then go look and I say, okay, silver and gold, where can I get involved? Look at this, by the way, gold is ripping here, fresh all-time high on stream for the 17,000th day in a row. We have gold here. And it's like, okay, well, where's the setup? Well, there's not really a setup here on gold. So this is maybe a bad example. Gold has, so much room to pull back. I don't think it will. I've said this 100 times on stream. I'm not betting on a pullback, but I'd be interested in one if it happened. If you got a pullback to the 34.25 or maybe even the 35.25, depending on the EdgeFinder's reading at that time, that could be a possible area where I look to buy the dip, put a stop on it, and see if I can catch a runner. Silver, same sort of story. I'm already long silver, but if I wasn't, essentially I traded this off the 4-hour chart. So like if I wasn't, and I saw, okay, silver's got a good reading, maybe I'm looking for a pullback to this 40.50 level, right? Spot price could be a good pickup there, in my opinion. Again, that's my thought process. That's what the EdgeFinder's for. The EdgeFinder helps you to scan markets and keep an eye on setups that look stronger than others. So instead of staring endlessly at one chart or trying to read 700 articles a day to stay up to date with what's happening fundamentally out there, the EdgeFinder helps to scan stuff on your behalf. That is ultimately the utility of the tool. It does not make you a profitable trader out of the box. Please understand, it is a tool. Just because you have a chainsaw doesn't mean you know how to perfectly cut down giant trees. Trust me, I've made my mistakes with chainsaws, not physically getting hurt, but my point is, here's a really quick story. Recently, I've been working in my yard, cutting down some trees, and what I found is that it's really easy to cut down trees quickly, but it's a lot more work to clean them up. So there's a perfect example of how just because you have the tools doesn't mean you become an experienced pro right out the box, right? So I have a chainsaw. I am not a professional lumberjack. I'm learning, right? I have the right tools, just need to learn how to use them. That's what the EdgeFinder does. It's the right tool. I'm a little bit biased, but I think it's the right tool, and I think it's worth every penny. EdgeFinder is 45% off for stream viewers right now. If you want our biggest discount ever, take advantage. 45% off is available right now. If you are interested in hearing more information, setting up a payment plan, splitting it into a couple payments if you need to, it's a one-time payment to get access. We'll drop a link here in the chat to where you can get access to the EdgeFinder, 45% off. Click here to send a direct message on our website to a real person, not a robot, to a real person on our staff who can get you some information about the product, answer any questions you might have about it if you do have some, and set you up with that huge discount while it lasts. That is just this week, and then it is done. So take advantage of the 45% off sale happening right now. And with that said, Up next, we have Marco taking over the show, our next show host. He'll be taking a look at setups, and he is another proud EdgeFinder user. So if you're interested in a combination of technicals, fundamentals, and applying them to your trading to actually find setups, stick around with Marco for a little bit and take a look at some of the setups that he's watching just after this quick break. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
Hello everyone, welcome to my segment of the stream. Let me just check if everything is working properly as far as the audio goes. Okay, we should be fine. So I do hope everyone is doing well. Hey FX Bashi. Hey Carlos. So yeah, let's get started. Carlos, if you have any questions, I believe the team will find your comment and they will let you know what you should do. If you want to learn more about the EdgeFinder, or you can go to A1 Trading and you can go to support. So A1 Trading, and you can go to the support on the website. So if you want to find out more about that, here on the bottom, right there. So, what do we have? Well, we have PPI and CPI that is up and coming. So we had NFP, which came in soft. That was last week. So NFP came in at 22,000. Forecast was for 75. So a big miss. Big miss on NFP. That is a good story for rate cuts. We can also take a look at the Fed Watch tool. Fed Watch tool. So yeah, this is kind of the introduction to the stream. We're catching up on the news events. We're seeing what is happening. We're seeing what we expect to happen. What is this? Did they update something? Oh no. Let's see. It's still loading. Okay, well, it's still loading. So the NFP story is actually good for rate cuts. But then also today we have, this week we have PPI and we have CPI. That is going to be a print for the inflation. So the jobs market is not doing well. We already know that the jobs market is it's not in the dumps, but the trend is lower. We can also take a look at EdgeFinder. We can take a look at inflation, no, labor, NFP. Look at the trend. So you can see a clear downtrend on this chart. You can see a clear downtrend. So the jobs market is struggling a little bit. Again, this is from the 5th of January, 2024 up to now. Clear downtrend on NFP. Now we want to see if the inflation is going higher, being the same, or going lower. So if you want to take a look at the inflation trend currently, we can take a look at the CPI. For the US, it is rising a bit in the short term. So inflation is rising. Now, as far as the PPI goes, let's take a look. The PPI is kind of rising as well from the last print in August, okay? But we're still above the 2% line for CPI and for PPI. So we are above the 2% target. Now, that makes things more complicated. Okay, it's loaded. So for the 17th of September, there is pretty much a guarantee of a rate cut. In October, there's a high chance that they're going to cut again. Okay, and in December, the target is 350 to 375. So I think 3 rate cuts. Yeah, I do believe 3 rate cuts should be priced in for 2025. Yeah, something like that. So let me just see the comments. Good morning. Hello. Hey, Alafi. Hey, Slugmeister. Hey, 11 seconds. We got jobs revision in 27 minutes. Okay. I'll definitely take a look for the revisions. Does NFP annual revision impact huge move in gold in the next 20 minutes? I personally haven't done my research on that. I'm going to have to do some research, so I don't have a definite answer for you now. If I wasn't getting married, I would be buying the EdgeFinder 100% worth it. So yeah, if you guys are interested in the EdgeFinder, if you want to get all of this data, for example, my last trade idea that I had that was posted in the A1 Discord was long the USD CAD. So long USD CAD, and the reasoning was that the CAD is in the dumps. So how did I get my analysis? Well, I went to the GDP. I looked at Canada. This sucks. This chart is awful. It's negative. It's all over the place. So the GDP is bad. What about the labor? What about the unemployment for the CAD? Absolutely horrible. So rising unemployment in January 24, it was 5.75. Last print was 7.1. That is not good. What about inflation? CPI. It is actually near the 2% target. So they have some room to cut. They have some room to cut interest rates. All of this is telling me that the central bank, the Bank of Canada, may cut interest rates, which makes me very, very bearish on the CAD. So if you want to check out the EdgeFinder, if you want to get access to all of these tools, you can use the code MARKO. Okay, so yeah, you can use the code, get a big, big discount, and then you can have these same sort of trade ideas. Or if you want to get the updates, if you want to get these signals, you can join the A1 Discord. So right now, this is in a little bit of a drawdown. I'm going to do a bit more detailed analysis on USD CAD, but I think this was a pretty good trade idea. One major reason why I like this is I'm already long euro dollar, so this would be a nice hedge. Since euro dollar is dollar short, USD CAD is dollar long. So whichever way the dollar decides to go, I'm going to make money on one of these trades. Or in theory, I should make money. So I'm kind of hedged, right? So essentially, I'm buying a strong currency against the dollar, and I'm buying the dollar against the weakest currency right now, which in my opinion is the CAD. Okay. FX Bashi has some breaking news for us. I'm not sure if that is going to impact the markets much. Yeah, congrats on the wedding, Curtis. Cancel the wedding and get the EdgeFinder. That would probably be a good idea. No, just kidding. Okay. Jobs revisions, 9K jobs. So did the revisions already come out? Please check US 30. Are you in any trades now? Yes. So I'll show you the trades. Nick could be a model, and he chose to be a trader and develop tools for us. See, he went through the hard route. Okay. Qatari Ministry of Foreign Affairs is very unhappy. Nice analysis. Yeah, no worries. What I like about the EdgeFinder is you can see where the institutions are putting their money. You could almost trade off of that alone. Well, I wouldn't base my sole trading decisions on the institutions. For me personally, I don't think it's enough data. I think you need multiple confluences. How much? Well, from the traders that I've followed and learned from, I think 3 to 4 confluences is a good number. So if you can find 3 or 4 very good reasons to buy or sell something, for example, you're looking at gold, and first thing you can see is institutions. So institutions are buying. right? That's your first reason. Second reason can be uptrend on the daily chart. Third reason could be fundamentals. So the numbers right now, if you look at the EdgeFinder, are telling you to go long on gold. So gold, very bullish reading. Okay, so pretty nice. All of the numbers fit the gold bullish narrative. So that can be your third reason. And then the fourth reason is, or could be, expecting rate cuts. Rate cuts are bearish for the dollar, but bullish for gold. So now you have four very, very strong reasons why you should buy gold. And that is what is called having a high probability trading edge. So 3 to 4 major confluences. I would recommend not just looking at what the institutions are doing. I would recommend stacking confluences on top of each other. Where will the revised NFP be published? Bank of Canada is not cutting rates in September. I don't think they are, no. But just in general, if you look at the numbers for the CAD, it is bad. It's a bad situation, especially the labor market, especially the unemployment for the CAD. It's just going higher, and this is not good for the CAD. So it means basically that Canada has a weak economy. You can take a look at the housing prices in Canada. If that is something you want to follow, look at the price of a house in Canada. From 2022, the price of a house has been dropping. So the demand is lower, and that is another signal that Canada is stagnating and maybe even shrinking, you could say. The economy is shrinking. So the demand for the CAD is going to be lower. If the demand for the CAD is lower, the price of the CAD goes down. So you don't even need the Bank of Canada to cut interest rates. Just by the pure numbers, I would say the probabilities are that the CAD will lose value. I think it's going to be the next thing that the big players sell. The latest thing was the big players bought a lot of gold. They bought a lot of silver. In my humble opinion, the big move is already done, especially on gold. I don't think if you buy right now, you're going to make a lot of money. I think the biggest meat of this move was here. If you got in, great. If you didn't, too bad. But I wouldn't be buying at these levels. And I think the next thing that could fly could be CAD shorts. That is why I'm basically long USD CAD. So it's my favorite currency right now to short is the CAD. Okay. That's a really smart move to hedge. Well, it does work pretty well. All of these trades are based on probabilities. All of these trades are based on raw data. And all of these trades have a positive expectancy. I know the exact reasons why I went long the euro, short the dollar, why I went long the dollar, short the CAD. And I think these two trades are pretty good for both scenarios. USD gains value, this trade goes up. USD loses value, or USD gains value, this trade loses. USD loses value, this trade goes up. So we shall see. CAD Swiss better than USD CAD? Well, you can make all sorts of trades. You can make all sorts of combinations. Why I particularly liked USD CAD is because I'm already short the USD, so as a bit of a hedge, and you need to look at volatility. So you need to look at how volatile is the dollar, how volatile is the CAD. Every single currency has its volatility. So if you're looking at the stock market, you wouldn't say that you are, let's say, hedged if you bought Nvidia, but you went short Microsoft. And you wouldn't say that you would be at zero because Nvidia is much more volatile than Microsoft. Well, it is the same thing with currencies. Some currencies are much more volatile than others. For example, the yen is super volatile. Japanese yen, very, very volatile. So you need to be careful what you're doing in the markets. If you have an idea to go short the CAD and you want to do it through, let's say, is it CAD yen? Yeah, CAD yen. This thing may be highly impacted by the yen. The yen volatility may play a huge part in this chart. So that sort of volatility could, let's say, screw up your trade. That is why I also like USD CAD, because in my opinion, it is a good pairing of the currencies, if that makes sense. I know it gets a little bit complicated, but my main point is be careful with pairing up currencies that have very different volatility. The yen is super volatile, while let's say the dollar tends to be more stable than the yen. That's one example. Okay, CAD Swiss. Let me run through the comments. Canadians in shambles, maybe. US 30, yes. So I remember the US 30 request. Let's take a look at US 30. Let me take a look. So US 30, I'm going to pretty much tell you my opinion on the indices. So I have the same opinion on the NASDAQ, the S&P, the US 30, and the Russell. And my opinion is this. Right now, I don't want to buy. So long-term, I'm bullish. I definitely believe this uptrend will continue in the long term. But short-term, I think we are due for a bit of a pullback. If you look at the S&P, slowing down momentum, definite slowdown in momentum here. Compare this momentum to what we had in the prior price action. Also, you have the story of bad NFP, but also rate cuts incoming. So if we take a look at NFP, USA, look at this. This is a downtrend. This is not good for the US economy. So that's the bearish reason. But then on the other side, you have upcoming rate cuts. Well, rate cuts are bullish for the indices. So you get a kind of a conflicting signal. You don't know whether to buy or whether to sell. You should sell because NFP was bad, but you should buy because rate cuts are just around the corner. That's sort of a scenario. I don't want to be a buyer. I think if you're getting such a bad NFP, such a downtrend in the NFP, it may be time for a bit of a correction, for a bit of a pullback. So I'm looking at all of the data. We can also take a look at the top setups page. Let's run through the NASDAQ first. Let's see. Neutral. So see, even the EdgeFinder is neutral. COTS, neutral. Retail positioning, they're actually short, so it's good to be a bull. It is always best to do the exact opposite than the retail. Same thing on the S&P. Let's check out the Dow. Neutral as well, but COTS, look at the commitment of traders. The big players, the institutions, they seem to be short, right? So you don't want to go against the institutions, and they seem to be short right now on the Dow, on the US 30. So I'm looking at all of these confluences. I'm looking at all of these reasons, and that is why the game plan is to wait for a pullback first. My favorite is the NASDAQ. So the NASDAQ is in the spotlight. I'm looking at these levels, and I want to see a pullback to those levels. So that would be around a, let's say, 7% pullback, something like that. I think that would be pretty healthy. That would be pretty nice. And at that point, once we get the pullback, we could gain some more momentum. We could accumulate some more buyers. We could reach this crucial level of support. We could also start getting the rate cuts. The rate cuts should improve NFP. The rate cuts should make the economy expand a bit again. So all of that is bullish, right? But if we continue with these bad NFP prints, I don't know, doesn't seem so healthy. So yeah, this is one of the reasons why I'm pausing as well, these NFP prints. You also may be asking, well, why out of all of the indices are you looking at the NASDAQ? Shouldn't you be looking maybe at the Russell? Because the Russell is comprised of smaller stocks, and small stocks benefit a lot from rate cuts because even if they're not profitable, they can take on a lot of debt, they can spend a lot of money, they can artificially inflate their stock prices. So the Russell could benefit the most from rate cuts, Well, I like the NASDAQ because I like the story of artificial intelligence. I think AI will impact technology companies first. It will drastically improve profit margins. I've been using AI for my trading research and just trading in general for the last 6 months. It's been great. I fully believe in the technology. I think it's going to bring another revolution, you can say, and so it has the biggest impact on the NASDAQ. So I think the NASDAQ has the biggest potential to trend higher and to show some massive gains. Okay. Ask Bashi to buy Curtis and EdgeFinder as a wedding present. That's a good idea. Indices are consolidating. Yeah, indices are kind of boring right now. Indices are kind of boring. So Elias says, hey, Marco, do you trade silver? Yes, I do trade silver. I have gold and silver on my watch list right now. I think the hottest thing on the market right now is going to be gold and silver. I did list all of the confluences at sort of the beginning of the stream. So I talked about the uptrend on the daily chart. I talked about rising inflation. I talked about upcoming rate cuts, fundamental numbers being very bullish for gold. And you know what is pretty cool is no matter if the PPI and CPI come in hot or cold, or let's say cold, if they come in higher than the forecast or lower than the forecast, gold should go up in both cases, and silver. So no matter what happens this week, gold and silver should go up, because if you get lower inflation than expected, if let's say PPI and CPI come in lower than the forecast, that means definite rate cuts. That means even bigger rate cuts. Rate cuts are bearish for the US dollar. That means they are bullish for gold and silver. But if we get a number that is bigger, a number that is bigger than the forecast, that means inflation is rising. Okay. Now, what do you want to do when inflation is rising? Well, you want to protect yourself. You want to protect your capital. You want to buy some gold or silver, right? You want to maybe sell your dollars and buy some gold or silver, because inflation is going to eat up your US dollars. It's going to eat up the value of your dollars. So both scenarios will be bullish for metals. That is why right now these things are the hottest item on the market. And you can see a massive explosion. What is my game plan? My game plan is to definitely not try to chase the price. I don't want to chase the price at this point. I think we are overextended. I think we are far away from the 20 MA, and I'm looking for a pullback. What about gold? I'm looking at this support level. Maybe even this one, but no, I would prefer for gold to go a bit lower. So this level, maybe even this one. So I definitely want to see a pullback. Maybe we can pull back, hit the 20 MA, hit the level of support, reject, show me an entry, and I'll get in. That is the game plan for gold. For silver, look at this support level. I think that would be good if we reach this level of support. So we do have the 20 MA. 20 MA is dynamic support, but then we have sort of static support, which is this level right here. So for silver, I'm looking at a pullback to this level, and then I would buy. And that is my game plan. So two favorite things right now, gold and silver. One problem though, they are running away without me, and they don't seem to be pulling back yet. We went for the NASDAQ. We covered gold, we covered silver, euro dollar. I do have a trade. Take profit is set at 1.7988. I don't want to stay in this trade for too long. I think the narrative of a strong euro and a weak dollar could be pretty close to a finish. I think this is not going to fly a lot more. I can also see in the A1 Discord, people are saying, what is the DXY going to do? What is the dollar going to do? Where is it going to go? If it melts lower, to which sort of level can it melt to? Will it break 96.4 and continue? In my personal opinion, if we get an inflation print that is sort of as the forecast, so if inflation comes in the same as the forecast, I think we should go down a bit more, but I don't think we're going to do this. So the most likely path for the DXY is a bit more of a sell-off and then a bit of a pause. So I do think there's a bit of room to go short, but not much. If we get a crazy low inflation print, in that case, you do have a catalyst for a massive drop on the DXY. Again, you need a massive catalyst. This level is going to be really, really strong. We know that fundamentals move the markets the most. I mean, they are the only thing that moves the markets. So if you have a crazy new fundamental, it should move the markets drastically. So if the inflation comes in a lot lower than expected, that means big rate cuts are incoming. That means DXY goes down. That could mean DXY breaks 96.4 level and drops even further. If we get higher inflation than expected, that means possibly fewer rate cuts and not such a big move on the DXY. Maybe even a bit of a bounce, right? So those are the scenarios that I'm looking at. But the conclusion is, I would say that there's not a whole lot of room to short the US dollar. That is the reason why I want to get out of this trade with a take profit, if it is going to be possible, and look for other opportunities, for example, buying silver or buying gold. Euro GBP, I'm still in this trade. I have a take profit set. I have trimmed my stop loss. I do want to get out. I was looking for a quick reaction on this one. That didn't happen. Instead, we kind of ranged around, messed around. I collected some nice negative swaps, which was not the best, but it is what it is, part of the game. Sometimes you get negative swaps, sometimes you get positive swaps. On my USD CAD, I'm collecting positive swaps. So as long as I keep holding this trade, I'm going to get paid. But for this one, I'm paying for swaps. And I want to get out. I want to get out. Usually when I place a trade, I would like to see a reaction fairly quickly. If I don't see a reaction, something is usually off with the trade. Something doesn't work as it was supposed to. The probabilities maybe are not as high as I thought. So yeah, basically that is my methodology. That is my thinking. I want to get out quickly if things are not going where I expect them to go. Otherwise, you get stuck in positions, and that is not the best thing to do. USD CAD is a new position that I took. You can get these signals. So all of the trades I take get posted in the A1 Discord. So you can definitely check it out in the description of this live stream. There should be a link where you can contact the A1 support, and I will see you in the Discord. But this is a new position from, I think this was Friday. Yeah, Friday. So new position from Friday. We are overall kind of grinding higher here. So we are producing higher lows, sort of higher swing lows, if you can see it, which means price is steadily grinding higher. But of course, my main reason to enter was fundamental analysis. As I showed you on the EdgeFinder, all of the data, all of the main data I'm looking at for Canada sucks. It's all bearish. Even house prices. House prices, I did some research in, I think it was ChatGPT, and I plotted some graphs, or sorry, it was Grok AI, and I plotted some graphs, and you can see housing prices, they did this in Canada. Up, 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 up. 22 comes, down, 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 down. So that tells you something is not doing well, something is not working in Canada's economy. Housing prices are a big part of Canada's economy, and they're a big indicator why Canada is in trouble. So going long on the dollar, short on the CAD seemed like a pretty good idea. And this is the trade idea. Stop loss is below this sort of support level. See, I would say this is a pretty significant support level, and it should hold. If the price goes lower, it should hold. Okay, let's see. I'm done with my segment, but let us check some more comments. Okay, we have a lot of requests. I will be live streaming tomorrow. So if you have more requests or more questions, definitely find me tomorrow. I think it's at the same time, so 9:30 Eastern Standard Time. And that's about it. That's my watch list. I'm also looking at USD Yen quickly to tell you, and then I'm going to wrap it up. So USD Yen, I'm looking at USD Yen to sell, but I want to see it break this level. And also this weekend we had the Prime Minister, I think Ishiba from Japan, he resigned. That could be a bit bearish for the yen. So I'm still thinking about selling USD Yen. Let's first wait to see a break of the support level, and then I will consider it. I do think it could be a good trade idea. Also check out the EdgeFinder if you haven't already. There is a big sale running this week. Thank you guys very much for watching, and I will see you tomorrow at 9:30.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.